Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is April 8th. Let's dive into the week's stock market news. European markets stumble as central bank outlook shifts. After a remarkable 10-week winning streak, European markets faced a setback during the holiday-shortened week. The Pan-European Stocks Europe 600 index declined 1.19% in local currency terms. This downturn was spurred by hawkish remarks from U.S. Federal Reserve officials and rising oil prices, raising concerns about potentially delayed interest rate cuts. Major European indices reflected this trend. France's CAC 40 index dropped 1.76%, Germany's DAX weakened 1.72%, and Italy's FTSE MIB lost 2.13%. The UK's FTSE 100 index declined 0.52%. Eurozone inflation nears target, yet ECB maintains course. Headline inflation in the Eurozone showed encouraging signs in March, easing more than forecasts had predicted. It reached 2.4%, a decrease from February's 2.6%. Core inflation, which offers a clearer picture by excluding volatile food and energy prices, also demonstrated a slowdown to 2.9% from the previous 3.1%. However, a note of caution persists, as service prices have maintained a 4.0% year-over-year increase for 5 consecutive months, suggesting lingering inflationary pressures within specific sectors of the economy. Despite these mixed signals, data from S&P Global's revised composite PMI offers a glimmer of hope. The index jumped to 50.3 from its initial 49.9 reading, a crucial break above the 50-point mark that signifies expansionary economic activity. This hints at a potential recovery beginning to take shape. Minutes from the European Central Bank's March meeting further solidify the picture. Policymakers are expressing growing confidence that inflation is gradually moving towards their target goals. Though the case for interest rate reductions is gaining support, the ECB remains prudent, opting to await critical economic data scheduled to be released in April before taking decisive action. UK housing market shows signs of life. Bank of England data highlights a revival in the UK housing market, with net mortgage approvals hitting their highest monthly level since June 2022, 60,400 compared to January's 56,500. Swedish krona in focus for Riksbank. Minutes from the Riksbank's March meeting indicate currency movements could play a critical role in future policy. Protecting the Swedish krona from further depreciation is crucial to combat inflationary pressures. The Riksbank maintained its key interest rate at 4.0% in March, hinting at possible rate cuts in May if inflation shows persistent decline. Now our insight into alternative markets. Family offices set to ramp up investments across the board in 2024. A new survey by Ocorian suggests family offices are gearing up for an investment spree. They're eyeing not just traditional assets like investment-grade credit, but also alternatives that include private debt, private equity, and real estate. What's driving this? Well, nearly all, 94%, of the family office professionals surveyed expect their offices to increase acquisitions compared to last year. This enthusiasm might be fueled by several factors. Almost half of survey respondents want to increase direct investments, potentially reflecting a desire for more control over assets. Additionally, many family offices are cash-rich, which means they're in a strong position to act on investment opportunities. Finally, diversification is crucial for managing risk, and adding alternatives can help them achieve this. The survey reveals a particular thirst for alternative assets. A significant portion of respondents expressed interest in slightly increasing their holdings within private debt, 60%, private equity, 48%, and real estate funds, 42%.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, thubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.